Good morning, everybody. Well, give me 1 second here. Sorry, getting some things set up. That's good. Yeah, give me 1 second and I will we'll get started here. So, yeah, that being said, let's cover today. Again, the title. Oh, wait, I almost forgot. SPY. Oh, yeah, I got to add something to SPY, short squeeze, SPY, and QQQ. Enter buy signal. Blow up billions. Who knew? There we go. Wait, I spelled that wrong. I'm dumb. Okay. All right, good stuff. We are ready to rock and roll. All right, so pretty much, yeah, the market blew up into a long today. The price target of today's long on the market were, what were they? Let me just double check a couple things and I'll get back to you. Yeah, so today's price target, initial price target, shall I say, would be 606.09 to 606.20 and some change, followed by a secondary long target on the SPY up to 1 second, the price of 607.57. So we'll cover all of it. We'll go through it. So essentially, for me, and I guess you could say members in our group and those that follow some of the Twitter posts that I make, your expected long targets today from pre-market were initially 606.09 to 606.25, followed by a secondary target of 607.57 for a gap and go continuation on the S&P. So, in my opinion, based on the way I was looking at things today, you should have been looking for, again, a 606, 625 to 607.50s target for the market on the long side today. So we'll jump into it. Oh, 1 second. It looks like this hotkey that I set up. There it goes. There it works. All right. So we'll just kind of, I mean, we can go from scratch or however you guys want to do it. There's a lot to cover, obviously, to kind of go through the process of all of this stuff. So, you know, give me actually another second. What I'll do is I'll actually pull up Twitter really fast, and we'll start with Twitter, then we'll move into all of this good stuff here. I wasn't really expecting the market to go higher than 607.50s, but, you know, it always kind of throws a curveball at you every once in a while. And again, the market's in a buy signal now, so you're not supposed to be short the market. You're supposed to be long the market. So if you weren't already long bias in the pre-market, you know, after CPI, then you should definitely have been long bias. More so once the market started turning into a positive trend and what have you. So we'll get into, again, all of this. There's just so much in my mind about it because there's quite a lot to cover to kind of get to understand that we would do such a move. I kind of think we're going to pull back to 607.57 at some point. It's only 30 cents or so, but it would be pretty common if we do that. All right. So we'll bring down Twitter here, and we'll start from pretty much the beginning. All right, so this morning at so this was 3 hours ago. So at 8:46 in the morning, this is just after CPI comes out. Today, CPI seems like a day to throw out a target. So SPY 606.09 to 606.25. That was just shortly after CPI, only 16 minutes or whatever after it was announced. We're looking at a 606 to 606.25 target. Then from there, I give a little bit of detail on it and kind of the more of the what if scenarios. But you know, the up down part, basically we blow the market up to 606.09, 606.25. If the market kind of falls apart, it just goes back down to some short-term stuff. So, which ends up resulting in this here. All right, so we end up posting this picture here. So during the pre-market, 606.09 activation, spelt wrong, but activation level. So once we were over about 604.86, that's where we start activating the 606.09 to 606.25, so on and so forth. And then this little 1 minute reset, 5 minute reset, that would be in the event the market wanted to, instead of blow up right away, try a pullback then go. It would normally target somewhere down into these levels for a dip. Anyway, all right, so continue on. This is where we post kind of that next picture, which is, you know, here's what it looks like in the bigger reset target. So, you know, including both the micro pullback support dip long with the expected long target destination to at least start on the day. You can see here 606.09 with this box, previous sell signal reset target. So that means at that point where we're looking for the bigger reset to the upside. Once the market is open and kind of starts moving, you will see here about an hour ago. So this was at 10:09. So yeah, almost an hour ago. Or wait, a little more than that for sure. Yeah, almost 2 hours ago at this point. We released the SPY max long target today as around 607.61. As long as the new buy signal holds intraday trend, all dips up. So the reason we're saying holds intraday trend, all dips up, we'll get to. So just want to at least go back, talk to you guys about some of the, you know, targets, destination levels that we talked about well before, even before market open, and then hours before what you're seeing here, and then kind of walk you back through why I picked all those areas, why we assumed the market could move that way and get to those targets. Okay. So we'll pull back Twitter. We don't need it right now. I will delete all of this and we're just going to restart. So we know that pretty much back on this day, the market went into a selling operation. So per, I will say, my strategy that I developed for myself, that tells us that on the 30-minute scale, the market is bearish as long as it's below this green VWAP. When we get above it, we will reset the upper distribution and, or in this case, the 50 SMA. So now we're going to move into the pre-market. Okay, so we're going to go take a look at the pre-market. All right, so let's kind of repeat that again. We know that when a market goes into a sell move and things go down, it's just normal for people to sell the market. So participate bearish, of course, right? And obviously, so if things are going down, eventually they're going to reverse. It always happens, okay? And if we know that if the market is in a sell signal and it's going down, and this right here is the 30-minute volume shelf of the bearish selling move, when we get above it, we reset the upper distribution. Or another way that I like to think of it is we take short sellers back to their max pain, okay? And then some in this case. So what we've really seen is a couple days ago, we went into a sell move. So we have a bearish move down. Today, we had a CPI catalyst announcement, which is a volatility event. So we used CPI to pop the market back to bullish after 2 days of selling. And after 2 days of selling, you can assume we've probably got some people sucked into a short. And once we got over this green level, about 604.80 or so, I know that we're really starting to hurt the short sellers, and they get squeezed a lot of times. So we'll just call this the short squeeze level. So I'm going to write this on the screen. And when I say short squeeze level, it just depends on how you're thinking of it. But for my approach to these things, this would be a short squeeze level. All right. Once the market gets acceptance above it, we squeeze out the shorts from the sell signal from 2 days past. Okay. So I'm even going to map this off here with another line. All right. So we got the short squeeze level mapped off. Okay. If this thing would freaking work. Come on. Let me shrink this down. Sorry, guys. And then we'll bring this over. So this was the short squeeze level based off the 30-minute system and strategy. Okay. Then this would be our, right here, I will map this off, upper distribution target. Right there. I'll put it like this. Sorry. So this would be the upper distribution target, which when I zoom in, these are all going to change a little bit. So this would be upper distribution target. Yeah. So we'll get into it now. So now we're going to zoom into the, we can do a 5-minute real quick. All right. And so let me take off this real quick. I don't really need this on for now. So, oh, darn it. Kind of do need that on for a second. Let me map this level off right there. And then also, I got to get the 50 SMA location as well. So again, as I'm going through this with you, this is literally what I do every single day. When I go through all this stuff, I figure all this out. And now I'm just repeating the process with you like after it's happened. But in the beginning of the day, this is everything that I'm doing. I'm going through all of it and figuring out these targets. Okay. So now my chart would look something like this going into this morning pre-market. All right. So now I'm into a pre-market chart, right? It's CPI. CPI is being released, right? So we, let me go to a 1 minute now, actually, and I'm going to take this off, all right? All right, so now it's the morning. CPI comes out, it's 8:16 in the morning. I release a post to Twitter saying 609 to 625 target upside if we can squeeze the shorts, all right? So CPI is released. So the market uses the catalyst event like CPI. Hey, Randy, how's it going? So we use the CPI catalyst. We run the market up. So much so that what it does is it increases the price of the S&P market above what I call the short squeeze level. So again, back here, it's a bearish sell signal. We/the market/the controllers of the market use CPI to blow the price up past the volume shelf of everyone selling short for the past couple days off of the sell signal that literally was a sell signal. Okay? We get above the short squeeze level. The max pain / upper distribution is the target of the short squeeze, in the sense that if we reverse / squeeze out the shorts from these past 2 days, you can almost guarantee they're all squeezed out when you get to the upper distribution. Almost all of them, if not everyone, and definitely all squeezed out here. Okay? So it's using past market participation to forecast future pain levels of the previous participation. So today I was using the past 2 days volume and trading to kind of get an idea for where the pain points are of everyone going bearish the past 2 days, and then use that to flip it up. Okay. So you have the short squeeze here at 604.83. one of the max pain level of just this 2-day market. So we're going to take the market from here to here. That market, their max pain is right here, where I'm going to put a sad face maybe. Or ooh, this would be, yeah, this is a good one. Yeah, right here. This unhappy face is the max pain level of everyone participating on the sell side of this move. Everything from that I'm circling, that. This upper distribution target, that would be a max pain. And why do I say it would be a max pain? Well, let's just assume for a second. Well, just think about it. On this day that I'm circling, on this day when the market came down, do you think everyone shorted the top here? No. Did they short here? No. In the grand scheme of things, most people that entered short or continued trading short down, most of them probably didn't have the high. You know, so as it cascades down, you can assume that most people's average price, anything selling, continues to go down. Therefore, their max pain's not going to be all the way back at this high. It's going to be somewhere lower than this high and mixed into this trend, because most people don't catch a high. And even if they did, they'd probably close out, then maybe re-enter short again. So when you think about how people would participate in that move down, at least on the sell side of things, you would know that, you know, this, and you track it the right way, you would know that average prices on the sell side where, you know, shorts would feel pain is not going to be all the way up here, which it is. I mean, it is, but you know that their averages is down here, which is the short squeeze level. So, as I said before, as everyone starts selling this move down, their average price, volume-weighted average price, ends up being right here this morning, where I'm circling now, the short squeeze level. Therefore, once we start to get acceptance above it, you can blow them up. But until you get through the volume-weighted average price of the sell move, you don't see the reset long. That's why today we flipped and said go long bias. Even though the past 2 days on stream, what do we say? The market's on the sell side. See how quick things can change? 1 day's time. But how did it change? The market used CPI as the catalyst. We used a volatility event to squeeze up the short, then to the short squeeze level, then we run it to a max pain level. Now, how do we come up with, let me take some of this off. So now, how do we come up with the 607, what did I say, 607.50 or something? We'll get to it. All right, so how do we come up with the 607.50 now? Real quick. So we're going to take today's action, and this isn't always a perfect system, but you can see how I've used a couple strategies in 1 day for all of this. So far you guys pretty much know how we figured out the market would squeeze up to about 606.20s. Now, how do we derive the 607.50? By taking the overnight gap. So once we used CPI, blow the price up, then trigger the short squeeze to 609, that results in a gap up to here, 605.78 to whatever. So basically, after CPI announced, we blow the short up, we short squeeze it up, it creates this overnight gap. And we use the overnight gap to predict the potential gap and go long target for the day. Hence the 607.50, 607.60. So as far as those Twitter posts from 3 hours ago and 2 hours ago talking about 606.90, 606.25, and then 607.50, 60s, it was derived from the past 2 days sell signal trend, using the short squeeze to get the upper distribution target, then using the overnight gap to get the gap and go target. Yes, this is not beginner level stuff, that's for sure. So you can see how we're using multi-strategy it's not, oh, look for a bounce and a reversal, so there's a lot that goes into that to be able to forecast those things before they happen. And it's not even always going to be perfect, right? You can see we've already gone above 607.50, so my idea of a max long target clearly isn't even right. We're going higher than that. But you just know, how much higher can it go? again, I don't think it's going to go that much higher, right? You know, if it does, I don't even, it is what it is. That's fine. It can just go for as long as it wants to go, right? But I just know from the past and past experience that to run a market out over the 161 extension very far is not an easy thing to do by any means. The benefit to the market running above the 161 today, you could say, is because we just started a buy signal today. All right. So yeah, I hope that helps. I know that probably was slightly confusing to a degree because there's a lot going on there. But yeah, so that's pretty much how we came up with that today. There was a couple other things as well, but that's kind of the main gist of how we came up with watch the market go up, watch us squeeze the shorts, and then look for the upside destinations to arguably 607.56. It would actually be a good time to double check the gap and go here on this guy. So we got the 161, obviously, and maybe even higher. What about this guy? We got 423. That's good stuff. What about big guy? And then that one's good. Yeah. Bitcoin. We'll go into this because we did talk about this before we left. So remember yesterday I was thinking we would see Bitcoin sell down to here. So I was kind of wrong about yesterday's analysis to some degree. Not all of it, but to some degree. Wrong about the move down to here, but right in the sense that we still had support here. So it's kind of one of those situations where I jumped the gun on the analysis without going through all of the time frames. But just before I got offline, I'm like, actually, you know what, guys? We still have the higher low support right here. So we're not going to activate the sell target to 92,000 unless obviously we break support. And then in chat this morning on our private stream, there's probably a couple here in the stream on YouTube that are also in the private stream. Even though I didn't post a Twitter about it or YouTube about it, they will know that we were also targeting on the long for Bitcoin this morning back to here. Oh, sorry. Where the two yellow lines are. Right there. Back to here to back to here. So once we failed going to this 92,000 and started holding support here for a daily higher low move, that's where I expected we would probably start to come back up to daily lower high resistance points, which are here and here. But that was done in our private room today, but needed to update you guys that this bullseye and this bullseye were kind of the current long target zone after I kind of figured out we're going to go there, arguably. So that's Bitcoin. Again, not like a whole lot to say with Bitcoin for the moment. Market's cranking and banking. That's pretty much it. Yeah. So hopefully you guys got all that. Hopefully you got it all. Oh, the old algo top. The old algo top on the old YouTubes, always. So yeah, that was cool. That was fun. And then I guess I'll kind of throw in the last little bit of it is since the market got over the price of 606. I gotta double check that. Let me think. Was it 606.24? Was it this? No, it'd be this guy here. Yeah. Yeah, then once the market got over the price of what is that? Wait, that doesn't seem right. Or I guess it is right. Wait, hold on a second. I'm tripping up. I gotta get back to here. Oh, that's right, because I think it's moved since when I last looked. I'm like, something doesn't seem right. Hold on. I guess no, that's right. Okay. Yeah. Yeah, okay. I don't know what I was thinking. So, anyways. Oh, I see why. Yeah, never mind. So, yeah, this is our this right here. This green VWAP, that's our long bias intraday trend for the moment. And so you're supposed to be long bias this market today as long as the market is over the green trend after we break over 605.98. And I will bring up Twitter again real quick. Profile. Yeah, so watch this. So, again, usually... Oh, what did that just do? That's dumb. Yeah, I don't know. That thing just... Sometimes every once in a while, like, drop all my screens when I do some weird thing, like moving a chart around, but... Yeah, I don't know why it does that. All right, so where did Twitter go? Okay. So coming back to Twitter, see here, again, about 2 hours ago, SPY, max long target, 607.60s. As long as the new, this is important, right here. As long as the new buy signal holds intraday trend, all dips up. More specifically, new buy signal holds intraday trend. That's where your main focus is. What is new buy signal holds intraday trend, and then all dips up? The intraday trend is the green volume weighted average price. Also on the 5-minute scale. Here's it on the 5-minute scale. All right. So this green VWAP is the new intraday trend after the buy signal, which is at the price of, in this case, 60. Really? I guess so. 605.98, which I will point to right there. The anchor point, right where it's anchored. This yellow line. That's where the new buy signal starts. So when you're reading this tweet, here, new buy signal holds intraday trend, all dips up, is because we are starting a new buy signal at it's 10:45 a.m. I don't know why my charts always do that. It's just weird. But anyways, you're starting a new buy signal right at this yellow line, right where the start of that green VWAP is. All right. So as long as the market stays above that price, the market is in the immediate respecting the volume weighted average price of the new buy signal. If it hadn't respected it, then that could be where you see a false long attempt, where the market tries a new buy signal, bounces trend support, then fails. This is where you'd see the market do this, like that, because it failed its intraday buy signal volume shelf. So everyone buying for the new breakout gets stopped out. But for a successful buy signal, you generally, to some degree, are going to hold the buy signal trend in the micro, because it just happened now. That's why we're not looking at a daily or a 4-hour or a 30-minute right in this moment. It's because there's nothing to develop there. If the market's going to stay long in the immediate, we're going to look for something in the micro to hold the buy signal, which is a 1 and a 5. And now that I've given you this strategy onto YouTube, it's probably going to stop working as good. Probably not, because again, it's only 30 of you guys. But again, if there was a stream of like 6,000-7,000 people, like some of the other YouTube streams, again, it probably wouldn't work as well anymore. So yeah, I mean, that is so far all of the edge and strategy we have used. There's more than that, but that's for the most part, that's about it. Most of the edge and strategy we have used for the market today. I don't know why I didn't just Control Z that. All right. Let me bring back up. I'm not looking at this. Wait, that's not what I wanted. Where'd you go? There you are. Oh yeah, like Easy said, yeah. So for the 30-something people of you here, feel free to hit the like button. Like button. Maybe it will help the stream. I have my skepticism, but maybe if you just want to take your forehead and smash your mouse real quick and make sure at the same time it hits the like button, I'd appreciate it. I don't know if the YouTubes are going to appreciate it, but I guess it helps. So if you wouldn't mind, sure, go ahead, rock and roll with it. Yeah. So it's been a cool day. Big CPI blow up. I'm glad that we were able to predict it a couple hours ahead of time for everybody that tunes into our Twitter. Again, I wasn't streaming to YouTuber in the morning, but yeah. So that's a good stuff. That is a good stuff. So yeah, it's start of a new buy signal, guys. So we're looking at strategy to the upside now, for as long as the buy signal lasts, which could, that beats me. I don't know. I just stick with the trend and apply the strategies based off the direction of the trend, and then flip when it tells me to flip. Hence why we were bearish for 2 days and then back to bullish today, just like that. And then you can even see, right, if you look at this chart, even though the price action isn't fully there, what does it kind of look like now? All right, you kind of have this down, even though there wasn't a higher, there was no higher low in here, but if there was, what would this look like? It would look like this, where you're going down, going down, going down, you went up, broke the short squeeze level, and then if you would have pulled back, people would go, oh, look, it's a higher low uptrend. Today was a day where we used CPI, and there just wasn't a pullback to start the uptrend. It went into an uptrend and just kept going, right? So you get this straight force long move, and it just so happens that's the way it happened, right? But in the event we actually did a pullback, then your chart formation would have looked something like this, because right there is the shift point. Like right, all of this is the shift point. And then also, I will say this, a lot of times why you can kind of be late to a move and it's hard to jump on board so quick is just because the transition of a 50 SMA or like a buy signal thing or a sell signal thing like we were talking about, it can happen. It can just be so quick that the market just goes poof up in the immediate, and you're like, well, that, and that's just what happens. Like when the market's at the right time, the market usually doesn't wait a whole lot for it to transition. It usually just kind of does it. So it's just kind of one of those things. It just is what it is. I guess maybe I will copy. We'll go to Twitter X. Oh, come on. You know what? Let's actually see. Okay, ladies and gentlemen, boys and girls. Anyways, yeah, just posted the stream link to Twitter, so we might get a couple more people in here, and at which point I will probably run through the entire analysis again, the same thing over. For those that maybe join us that are new, I might again just wait a little bit, numbers jump up, then I know there's probably some newer cats watching. I'll probably have to repeat some of this stuff, but it can't hurt you guys. It really just should help if anything. And I should actually hit. I'm gonna do a mass. Hold up. I'm gonna use ChatGPT to give me a list of 100 cryptos and stocks with the $ in front of them so I can copy and paste to a Twitter post so it mass sends to all the tickers feeds. Thanks. Boom, boom. And that's how that makes my job easy. What's happening with Bitcoin? I will get into in just. We did cover it a little earlier, but I'll jump into in just a sec. This is good. Oh, how many do they allow? Let's delete these. I'll try that. Too many. That's lame. I mean, I guess, yeah, it's kind of like significant spamming, so I kind of get it. All right, well, I guess that works, however many that is. Don't know. Let's actually do... I'm actually going to do a new post like that. Sorry, guys. I'll get into this stuff in a second. Copy. Post. Boom. Copy. Bing, bang, boom. And then, well, I could use everything it. And let's do... Try that. Boom. But probably won't do anything, but you know. So yeah, I guess we'll jump into it again. But before we do that, we'll get into a couple other things. So I'm gonna flip here and actually kind of set up some cool hotkeys. So let's see how well this works. Actually, that is labeled incorrectly, but it should bring up a VIX chart here in a second. Yeah, so we're kind of into the VIX now. So we're going to take a look here at the VIX real quick, which pretty much just is that the volatility index with today's CPI hasn't actually broken down its buy signal. So this is kind of interesting, right? Because normally if the market's in a buy signal, you would assume that the VIX would actually go negative on trend, but it hasn't. So the buy signal that we started on the volatility index a couple days ago leading into CPI, which was today, all right? So we had the buy signal lead into CPI today on the VIX. Well, the CPI blowing up today has really just resulted in what? It's just resulted in the volatility index pulling back down to support. So this whole crash that you're seeing is because CPI comes out and we break the market down to expected 30-minute trend support. You see that? So we're really just at 30-minute trend support down here. So the fact that the volatility index hasn't gone into a downtrend even after this entire long move is interesting. What does it mean? Well, I mean, it's confusing to a degree, because you would assume if the market's going to blow up in a long signal that the VIX would have confluence and be in a bearish move. So partly what I think is we have a big gap down on the VIX, and the VIX just doesn't want to gap and go down. The volatility for the volatility index is low, and you're at the 50 SMA support, okay? So really this means like two things. It means we may bounce the VIX going into the remainder of the day or into tomorrow, and that kind of helps constitute a little bit of a pullback on the market off this run. Vice versa, it would be in the next day or so, if we can get the VIX to fail the 50 SMA, we can use that as an interim catalyst for the market to move higher. So say tomorrow we wake up, market's just hanging out, and then the VIX breaks down, the VIX breaks down and goes into a downtrend, that will probably in the immediate cause the market to boost up into a little bit of a long. All right. So yeah, that's basically that. That's the VIX. So the VIX is actually in an uptrend right now still, very ever so slightly. And remember just a second ago how, nah, never mind. Well, I mean, I could, but nah, never mind. I mean, I guess I could. So remember how we were just talking about on TradingView here with the market. We were just talking about, hey, you know, if the market had gone and did a pullback, it would look something like this, right? So this is, it's similar here, right? So it's similar when you look at, say, the volatility index, which I'm going to bring up here real fast. All right, so if you look at the volatility index, it's very similar like what I was just saying. So let's say the VIX is the market for a second. Remember, if the market had popped up and did a pullback, you'd see a WW. So this is the pop up, and then this would really be that pull back, right? So you can see where that formation comes in after an uptrend start. So this right here is the VIX downtrend flipping to uptrend, and then a pullback to trend support, all right? If you look at the SPY, it didn't do that, obviously, so far. Or yeah, if we go back to the SPY, you can see, what do? We have gone into a downtrend. Then right here, we kind of triggered a short squeeze and flipped the market up. And there's no pullback yet, right? So arguably, it's the volatility index, which is holding an uptrend, that could very well, you know, cause that little bit of a pullback. These are all kind of really random what-if scenarios, but those are things in the back of your mind in the short term. So hopefully that helps to some degree. Oh, well, that was the first donation I've ever had in a long time. So appreciate that. Even that's really cool. You didn't have to do that. So thank you. Happy Tesla all-time high. Well, then I guess we got to look at Tesla. So why not? And then I will get into Bitcoin for you easy. So Tesla has been on a buy signal since here, whatever day that was. I'll throw it on a vertical line. So right now, Tesla, vertical line, been in a buy signal since 10:30. Thanks, Oliver. I appreciate that, buddy. So yeah, you have a long-term, or not a long-term, you have this vertical line. That's where Tesla went into an uptrend. So the short-term market has been in a buy signal on Tesla since around the date of November 29th, Monday, December 1st or so. Market's been in a long signal there with Tesla. So yeah, I mean that's the first thing. Obviously, if we look at the long-term stuff, it's going to be up, right? We obviously know that because it's up. So if you're looking at the weekly, the daily, that's all positive. So there's really nothing that would tell you should be expecting downtrend on Tesla. That could change at some point. And for me, that first thing would be looking at the short-term 30 to see if it goes negative, kind of like you see here, right? This breaks down here, under trend, negative. This breaks down trend here, under, negative. This breaks down trend here, under, negative, all right? But we just broke uptrend here, so it's positive until it breaks down trend here, and then we'll look negative. 1 second, guys. I got a phone call coming in. Be back soon. Hola, we are back. The same 33 people. Interesting how that works. All right, so yeah, Tesla's looking good in that regard. You know. Also, somebody asked me about MSTR earlier too. We'll get into that guy too. See, well, I'm not gonna say you see, but we're kind of slipping that 50 SMA in the VIX right now. Anyways, so let's get into Bitcoin again for easy here. So these were the most recent targets that I was looking for on Bitcoin in the short term. Yesterday we had a target down to here. There was a target on the sell side down to 92,000 below this guy. So below these lows, with acceptance, we would have looked to there. Since obviously that just never happened, it just holds support and rallies up, higher lows, and then backtracks new targets on the upside. Essentially, you can put it this way. Yesterday, or 2 days back, we had posted sell targets to here and here, and then here. The same way that we derived all three of these targets to the downside are the same way that I've derived these targets on the upside. So the market merely just went from a sell, targeting down to potential supports, eventually catches support, higher lows out, and then backtracks to targets here. So yeah, I mean, so realistically, the downside targets here that we were derived for upside are the same way we're deriving these and these, which are just long side of targets, potential resistance pullbacks, until we break out and actually do something different. So yeah, we're just taking the sell side stuff. I'm always want to hide some of the stuff because it works pretty damn good, but then it's then you're kind of lame for hiding stuff, but it's all out there, I guess. So yeah, that's pretty much it. We just used the this daily low to create this daily low, and then we just really looked at this daily roll high to create the daily top down. So we essentially just took the market and looked at it from this perspective, which was market up, market pullback, higher low, market pull back, push up, roll back to support, create higher low, push up to where they may try to lower high it, but I don't think it. I'm more bullish regardless. All of this stuff is just the in between along on the way up. So essentially, if we're always thinking up for the moment, we're looking for support to hold on the bottom and then force back up to where the bearish lower high would be at if it were to top. And if there's no top, then it just keeps going, right? So instead of putting a lower high here and we keep going, then later we'll look for a lower high here, which would come off this low here. So now we're going to be looking at a higher low support hold off this VWAP, but again, it hasn't been developed yet. Look at it, just looks like two lines. That's all it looks like. This is literally what it looks like. Just two little lines in the bottom of candles, because it only started 2 days ago. So if this were to rally out for 4, 5, 6 days or something, even if there was a red day in there, and then all of a sudden we get a candle that kills the market down, right? And I'll flip this to red. All right, if we get some candles that come down, so say we're going up green, and then we get some candles that come down and reset, we will be looking for this volume weighted average price support catch up, and then as the market sells down into, we would then look to build a long off that daily support, and it will do something like that, right? And then we would look to reverse the market off the daily support. Similar to what you just saw here, which was, again, you had green candle up, right? And then you had red sell down into VWAP support, and then following day, because it's daily, so into daily support, it's going to take days to work and then roll up off daily support. So that would be the same logic if the market continues to, again, rally out, and I'll delete this yellow line here. So if market continues to rally out, does something like this, I don't care what it looks like, right? And then all of a sudden you have a red pullback like you're seeing here, and I'll just move these over. All right, you have red pullback, something like that. All right, we could be looking for that scenario. And so that's kind of one way that I go about tracking the daily charts. And just, again, it's just a matter of, like we said earlier on the 30-minute, moving the markets to and from previous market participants, call it max pain. Like, obviously, if the market does the scenario on this chart, that will just mean they're just programming algorithms to our stream at that point. But if we did something just even whatever, something like this, right? We know that anyone who buys this and then anyone who buys this, the daily chart volume weighted average price would be somewhere down here where I'm circling, right? Potentially. Thus, if we pull the market down to it, we screw over everyone on that top candle, this candle, this candle. The only one that didn't get screwed over are the people that bought the low of the dip in the last low, right? So they're good. Everyone who chased it up, they get screwed, and then we restart it up, which I can show you on a micro chart today. It's the same logic. So if we go look at the SPY today, and we go into a 1 minute, all right, and we look at the buy signal stuff here. 1 second. Why does it keep doing that? That's annoying. All right, cuckoo. Where was the buy signal? It was this candle here. So if we look at something like a 1 minute, all right, we know today that the market entered an uptrend here at the 1044 candle, right? Or is that 944 candle? Sorry. All right, we know it entered an uptrend, right? So what are we going to do? We're going to track the uptrend. Oh, what do you know? So there is the uptrend start on the 1 minute. And there is our back test of VWAP trend support from the uptrend start. You see how these first couple and this is a little bit of a different strategy, to be honest, but let me show you what I mean. All right, so disregard this guy because we're talking about lower lows, higher lows. So we're just going to go from the beginning of the day. Ready? So watch this. Okay. So market pull. Oh, sorry. Why does it do that? That's dumb. So right here, look at this, ready? Up, pull back, all right? Then rally up, and then pull back, ready? So we're gonna go from the low of day today. So you have what? You have pull back, rally to a high, start a pullback to where? Low, take everyone who chases it up out, buy, dip, up, right? And then in this case, it kind of changes a little bit because we end up doing a breakout over the 50 SMA, and that constitutes for a new strategy there. But let's just take this scenario. Rally up, pull back, anchor low, rally up, pull back to anchor, rally up, but obviously not really failing. It's failing to break out in that moment. But that's also because we have the breakout of the 50 SMA VWAP buy point still to happen, which is here, and then long press boom out. Okay. All right. So you can see how we could even go back to like the previous day, and there'll be multiple examples here, right? So we can take this down to the micro scale here. All right, so we'll just start here from the highs, and we'll go down. I mean, we could do it both ways, but settings low, high. All right, so there you go. So we'll just take from the high, down, rally, up, reject, right? So down, up, then anchor highs, then you go down, up, back to VWAP, then you break into low down, then you go anchor down, and then you will see rally back to anchor, etc. So we're doing the same process on the micro 1 minute as we are doing here on the Bitcoin daily. It's just going to take longer for that sort of thing to play out, because you're using, where the hell is the price? There it is. Because you're using a daily chart, right? So it's the same exact thing. It's just on a daily chart, right? So we're just gonna have to it's gonna take longer for that to develop, right? Because if the market, were to break up and kind of rally out, then you're going 1 day, maybe 2 days, maybe there's a whole week or 2 weeks where it kind of goes up, trades sideways before it even snaps down. Versus a micro 1 minute, you could see that happen in 5 minutes, 2 minutes, right? What's up, Semp? Good to see you in here, buddy. Yep, so cool stuff. But anyways, Bitcoin, again, got picked up on the long yesterday evening, 94,000, something like that. But yeah, so today's long move to the upper distribution target, which then flipped into a buy signal, which then attacked the gap targets, has effectively increased the market by, I don't know, I think I posted it, yeah, 1.6 billion to 2.47 billion in market cap today. So that's pretty cool that the long target destinations we announced for the day have added as much as 2.47 billion to the S&P or SPY market cap, at least. That's pretty cool. Do I think we'll hit it? Oh, actually, I'm glad you said that. And I'm glad you brought up Bitcoin again, because I need to show you guys the updated targets. These, yeah. So the targets, I think, are updated a little bit more. Let's see. So I just keep going based on, yeah, so right now the target's range from 123, basically 124,000 to 137,000. And if we transition that to, this should bring over my QQQ charts here. Yep, so if we transition to a TOS chart here real fast, and then take this to the Bitcoin futures, because the Bitcoin futures are priced a little differently, but if we look at the Bitcoin futures, we arguably have into 125,000 to almost 140,000 now for a euphoria blow off top. So it's always been my assumption we're going to go up into that +3, +4 area of the weekly chart. So ideally, until we hit that target, so we're close to 150,000. Sorry, we're close to 150,000 now, as far as destination for a euphoric market. But it's always been my assumption we'll go up, we'll get about, whatever that price target is when it happens. It continuously changes, but whatever that target is when that day comes, it's always been my assumption we get that. And if we didn't, that just means, again, we pretty much run out the timeline of our bull market cycle and then enter the timeline where maybe a bear market cycle would be upon us. So it's really, we go to target or a bear market starts, which sounds pretty dumb when you say it like that. But yeah, so still my assumption, we're going to go up, get to the euphoria market. Once we get there, everyone's going to be extremely bullish, so happy. They're going to be like, I told you so, which I'll be like, I'll told you so if we go up there. So that's where a lot of that, I told you so, you got to own it. We're cranking, we're banking $2 million a coin. Next thing you know, your grandma that's in the nursing home is freaking posting memes on Twitter about her bags. So, That's where I am assuming that's going to start to take place, is once we get to that sort of euphoric area. I mean, Bitcoin's only trading one standard deviation away from its mean right now, so it's not even like it's crazy, right? This is not a. Everyone thinks this last leg up was crazy. It's nothing. This is still nothing yet. What will be crazy is when Bitcoin does something like MSTR. See, MSTR had already done it. So if you look at MSTR weekly, which it doesn't look the same anymore, but this run here was the euphoric boom up to +3, +4. We haven't yet done that on Bitcoin. I'm assuming that's still going to happen. So it's either we do that or we creep too far into where the bear market timeline starts at. So it's either go up or not go up, which sounds dumb when you say it. But I'm still on the gang side. We're going to go and get, at this rate, 125 to 140,000 or so. And it actually kind of looks like MSTR might be creeping into a little bit of a buy move today. We might be a little late to that, though. Let's see. Well, it did on the pre, but that's kind of meh. Yeah, we did start a long move on MSTR today. Obviously, the market's been up and so on and so forth today, but we did start a little bit of a long move here today on MSTR. That could have been a decent play. Kind of. I was actually thinking about it too. I was like, I gotta watch that today, and I totally forgot. But you know, what are you gonna do? I want to go to the pre-market here. Extended. Take this off here. Yeah. So similar scenario, right? So we start a buy move on MSTR over the price of 382 today. So we would effectively be running volume weighted average prices up like a so. So yeah, this would be my current long buy signal trend for MSTR today. So again, being that the MSTR market flipped positive here where the arrow is pointing and starts to break into a positive trend, this would be my volume weighted average price of that uptrend now. Hence the up, pull back, dip long, pull back, dip long. Because I'm tracking the start of the uptrend that started today in the pre-market at around the time of 8:49 a.m. So as long as MSTR is holding the volume weighted average price of its uptrend start, then it's fine and the long stays together. Just like that of SPY, which was what? Which was at the time of whenever this was, the market started a new uptrend. So right here, SPY goes into an uptrend over the 50 SMA as long as we maintain the volume weighted average price of the new buy trend signal move, we stay up. Same thing with MSTR. Stocks doesn't work as great because they're more volatile than the actual index or SPY. So you do got to be a little, cautious / take that with a grain of salt. But concept still works, still there. Just not maybe as clean as your underlying SPY or SPX index. Yeah, so that's all good stuff. Can I do Intel? Looking like a good setup until we start seeing exchanges going under. I think crypto is still good. Ever listen to Ben Cohn's videos into that? No, I've never listened to Ben. I've probably seen some of the stuff at some point, but no, I haven't looked at that personally. Oh, sorry about this. I didn't get to. So yeah, thoughts on like MAR, CLSK, and all those. So again, when Bitcoin moves well, those tend to move well. So it's kind of the mining companies. It's just like if you own Bitcoin, you own Bitcoin. That's it, right? So if Bitcoin goes up, you make money, right? But if you own, if you're buying Riot and CLSK and all of these things, yes, though the Bitcoin price goes up, and though any Bitcoin they mine and any Bitcoin they hold allows them to make more money, they still have the overhead expense. So if you were to compare something like MSTR to one of the to the mining, it's in the sense that there is significantly less overhead in the terms of MSTR just buys Bitcoin, holds it, issues debt, right? So their overhead is really paying back debt, right? Basically, paying it back to their creditors. The flip side of that is CLSK, Riot, things like that. Their overhead is, well, in this case, if they're issuing debt to buy some, which I think one of them did, whether it's MAR or Riot, I can't remember, but maybe both of them at this point. But they have the overhead of mining, right? And then if new technology comes out like quantum computing, right? Then what happens to all of their old inventory that they already spent a bunch of money on? Did they get the return on their investment of their equipment prior to advancement of technology forcing their old equipment out of the door and then forcing them to pick up new equipment? So that's where you it's kind of a challenge for miners, in the sense that as technology advances with pretty much everything, you have to continue to keep up. And if your previous investment in hardware didn't yield the return that you were looking for before new advancements take place, and then you have to play the catch-up game, that's a battle that you face as far as a company is concerned. Whereas if you buy and hold it, there's no overhead, right? Other than, your wallet, your internet, right? So if you're going to buy miners, I would say you are taking on some degree of more risk than you would be by buying Bitcoin in itself, because you're not banking on just the price of Bitcoin. You're banking on the price of Bitcoin and how that company is fundamentally running their company, and if any of the equipment, and they're chasing technology, and that's what you're buying then. You're not just buying the return on Bitcoin. You're buying some company trying to make their own return on Bitcoin, right? So that's kind of the other interesting part, is like they're really just doing it because they're trying to make a return off the Bitcoin returns, but they're doing it in a way of mining and then creating a company, and then you can invest in it. So they're hoping that you invest and they can take your money and go make more money, but that's all based off of Bitcoin going up. So it's an interesting game, that's would be my spin on it. So I don't really care for miners personally. I've looked at their price action, and their price action is not superior to that of Bitcoin's price action. So I see that those already lag Bitcoin in that regard. I'm not saying they're a bad choice or a bad pick, but that's just my take on it. Yeah, exactly. Like if you are the person that owns the mining company and you have all this stuff, or if you're the person that's like Semper said in the gold mines, like if you have the equipment to go mine gold and have it all set up successfully, you're far better off going and mining the gold than you are buying the gold. Because if you're not making any money, you can't go buy any gold. But if you have all the equipment to go mine the gold, then you just go get the gold, right? But it's for those of us who can't or don't have a gold mine and a bunch of equipment to set up and go and make that money that way, then we are more likely better off going and buying the gold versus, going and buying a portion of the company that's got all the equipment, so that's kind of the way I see it, right? You could buy miner. So the other way I would see it is if you're going to do that, you have to be able to for sure tell yourself that the miner itself is on sale significantly to, say, the underlying Bitcoin market. Because at that point, you're getting an arbitrage deal, right? If we were going to buy Tony's gold mining company instead of buying gold, and we looked at Tony's gold mining company and the stock, for whatever reason, based off their assets, employees, and cash on hand and how much they're going to mine, if we saw that the current market was undervaluing and underbidding Tony's company, then there would be an arbitrage there where we would buy the mining company because eventually the market will reprice it to where it is, and there was actually a deal to be had. And if you can't determine that's the case, then you're almost better off just buying the underlying gold at that point, right? Which is always the same saying with investing in any stock, right? If it's on sale and it's on a deal and there's an arbitrage to be had there, then you would buy it. It's the knowing that's obviously the challenging part when that's the case. But yeah, so that's a take on that. Yeah. MSTR needs to lock in and not become complacent before it turns around. MSTR is kind of risky with Bitcoin flipping. Yeah, so MSTR, so far I haven't had any issues with actually getting streams started. Again, not sure who flipped the switch on our streams, but they work now all of a sudden. So someone with some control has allowed it to happen. Why? Couldn't tell you. That being said, they still do keep our channel at negative subscriber growth month over month, so there's still some forms of something going on there. But you know, what you gonna do? What you gonna do? Just help people predict the stock market's gonna go up $2.5 billion a day, and that's what you're gonna do. So yeah, not sure what else to. There's always something else to say. There's always something else to do. You know what we're actually gonna do? We're actually gonna hit this cool little Stream Deck "Be Back Soon" button, and I'm gonna go get a coffee. Sounds good. Okay. All right, we are back. I guess that's normal. So yeah, real quick, we'll take you over to here to this cool fancy chart. Boom, boom. You see that little switcheroo? All right. So these are the market internals, and pretty much, yeah. I mean, this will just give you a view of the market real quick. NASDAQ 100. You can even see since the open, the NASDAQ 100 didn't do much. So with today's CPI, the market gaps up. Hence why the issues gap up. Then since the open, the NASDAQ 100 issues pretty much just sold off. Once the market opened, just looking at the NASDAQ in general, advancing declining issues here, really just up and just down. So again, majority of the NASDAQ did not advance this morning with today's up move. If we look at the FANG, it's pretty much the FANG that did everything this morning, as per usual. So the market gapped up with CPI, and we pretty much used most of the major popular FANG tech stocks to rally the market out and force the squeeze up. All right, if we look at the SPY issues today, pretty much same thing as the NASDAQ. Again, SPY issues up with CPI gap up, and then the issues just fall off a cliff. Nothing to do there. Same thing with the NYSE, advancing declining issues. I just look at all this stuff because I like it. Come on. Computer's tweaking. Yeah, figures. All right, there we go. So, again, up, and then they just get tanked. So, the funny part is though the market is performing really well today, there isn't a ton of advancing issues since the open on the market. So you're not getting like full-blown participation in that regard. So that's kind of interesting. Something I think about in the back of my head. But a lot of times, you know, markets can move solely on just the FANG having a good day. Not all the time, but sometimes. Kind of like what we're seeing here today. Silver SLV. Silver's currently on long side of 30-minute trend. Excuse me. Kind of chopping the daily chart. It's not going to be overbought in terms of like statistical probability. So really we would just say right now long-term trend is up, daily chart's up. Really no major sell pressure there. Doesn't mean it couldn't top. I mean, to me it actually kind of looks pretty decent. I mean, I've been buying silver for a long time. Into here. I haven't actually bought it as of recent, but yeah, I've been buying all through, let's see, 2017. So pretty much all through this. And I would say right here, all through this. Gold. Yeah. I would say gold kind of flips into an uptrend all the way back here. That's when I was really focused on it. I mean, gold looks good. Silver looks good. Again, they're debasing currency faster than you can imagine. They just print with no means of stopping. Even with, you know, even if you want to say like Doge, government efficiency, I mean, it's, let's just say they pull it off, whatever. Who's to say that the next 4-year presidency couldn't try to reverse some of that? So it's like even everyone talking about Doge and government efficiency and that's going to bring down inflation, I just kind of giggle and laugh because it's just not. If they do a really good job at cutting government, then yeah, I mean, you can slow things in the immediate, but it has to stay that way ongoing and start to go the opposite way. So you can't just cut, right? You have to cut, surplus. Surplus pays down existing over past due debt. Ongoing. Every administration forward. Then what you'd end up seeing happen is you see gold start to come down significantly. Silver start to come down significantly. That's like more like fairy tale analysis at that point. But yeah, you would need every government administration, current to future, to continue on with the Doge efficiency and more so that A, there's surplus and continued increased surplus to then continue the expedited paying back of current debt. That would probably hurt Bitcoin's momentum. It would hurt gold's momentum. It would hurt really any inflationary assets momentum. Therefore, it would actually hurt the rich more, and it would benefit the poor. Wait, that would sound weird. It would benefit the poor or people in poverty or low income, medium income, right? more than it would the rich, because rich have a lot of money parked in assets, houses, gold, silver, buildings, you name it, Bitcoin. And so they're chasing yield outside of the dollar, whereas lower income already have less dollar to invest. So it significantly hurt higher income earners and higher income invested people than it would median. And so you can almost assume why that's probably never going to happen. It would also just be a good thing overall. So, like, you know, it's an interesting take, but, you know, that's what you'd probably want to see. Now, again, the fact that Bitcoin's global, I don't really know how much that would truly affect it. But you can assume that any inflationary asset would be less inflationary if inflation weren't inflating, right? If inflation were deflating, then you would assume that inflationary assets would probably be deflating a bit. But that is so far in the winds of not going to happen that, you know, we should just continue to expect debasement in some form or another. Yeah. Back over to our friend TradingView. Where did Bitcoin go to? 5 minute. So yeah, Bitcoin basically hit targets pulling back. So like right now what you're seeing, you're basically seeing the pullback to retest the breakout of the daily top down jibber jabber, which again, this is kind of a common short-term thing. Unless you're leveraged up on futures or leveraged up, there's really no point of even trading any of this analysis that I'm saying on Bitcoin. So unless you're going to hit futures or have some sort of leverage on Bitcoin play, there's no point of even doing anything with this analysis that I talk about in some of the short term. Because there's just really no benefit at that point. You'd have to have absolutely boatloads of money or you just can't. It's really pointless, right? So, you know, this was our daily top-down target. So that's the breakout, and then that's the back test right there. It's very common thing to see. A market crash can help with inflation quickly. I mean, yes and no. Because it's a double-edged sword the way that we operate. So unless the way that we operate changes, then it actually becomes an inflationary thing. Because every time we've crashed the market, you have a short-term decrease, whether it be like in equities. If they were talking the '08 crisis, then it was a short-term decrease. Well, I don't really call it short-term, but it really was short-term decrease in housing prices. So there can be a decrease in the pricing structure of things. But if the government needs to step in and print money to prevent too much economic fallout, then it becomes short-term inflation adjustment, long-term inflation boom, right? The Fed. So, yes and no. Really, the only thing that could prevent inflation is reducing the biggest expense that we have as citizens, which is the government, and government activities and overspending. Again, that's really just it. And then pay back down debt. Stop issuing more currencies or currency. Pay down debt, and that's the only way. Unless you create AI and robots for free that do every single piece of work for everyone, then there would just be cheap labor, right? So then, theoretically, corporations could reduce all the prices of their products to reflect not having to pay wages anymore, but, you know, that's not going to happen. So, again, you have to go to the biggest source of money, which publicly is $4.5 trillion annually, and that's the government. They are the biggest corporation. So just is what it is. Mike, know that standard deviation study that you see me pop on the screen every once in a while is kind of helped a little bit with the logic of it, but right here you can search up JMF tattoo and it will come up. JMF tattoo. That's the guy who built it. He's a trader in some group. I forget where. The VWAP something. I forget, but yeah, he's the one who designed that one. Yeah, I mean, I'm not going to sit here and act like I know how to save the entire country, because I don't really know how you would totally do that in that regard. But one thing is, it's always the easy answer, which is probably not so easy to actually complete. But again, the easy answer is always going to be, you have X amount of dollars you make, you can't spend more than that. That's it, right? So whatever services that can afford this year, that's it. It's pretty straightforward. But since we've done it incorrectly for so long, to fathom the idea of going back to just spending only the money you make would mean you'd have to cut from so many other places that our current government has promised to people. So, right? The argument is, do what we're supposed to be doing or not, because of unfortunate promises that we've made and continue to have made for so long. So it's the emotions and what would happen in the economy and the displacement of everything to go back to how you should do things, or as far as balanced budgets, at least. Again, can't tell you how exactly that would all unfold, but I mean, that's as simple as you can make it. Then it becomes confusing and complex because, yeah, people lose jobs, and then someone who relies on Medicare or Medicaid and Social Security, if you took from those or the military, industrial like all these arguments come into place, So I guess the simplest answer would just be only allow them to spend the amount of tax revenue they make. And that's it. One thing is for sure, though. The world will not end. Remember, though. So you can wake up with a smile on your face and be happy, because we know no matter what, the world and the universe will not end if they get less taxes. You can still wake up tomorrow, given you're healthy and nothing crazy happens, breathe some fresh air, probably eat some food, probably drink some clean water, depending on where you're at, probably have clothes on your back, probably still see your kids, probably still have some sort of means of transportation, probably have just a fine life, even if there was less taxes and we balanced a budget. So things would be okay. The world will not end. Right. QT is not working with the government. Quantitative tightening. Yeah, I haven't kept up with a lot of the quantitative tightening stuff as of recent. I always peek at this stuff every once in a while, or look at some Twitter account that posts it for me, and I get a glimpse of it. So I haven't really looked at much of that stuff as of recent. But yeah, I mean, I think they've been trying to do some quantitative tightening, but it really just hasn't worked. Actually, let's look at the 10-year yield today. I haven't looked at that. That should be this guy. Yep. pretty much just chilling at the 4.2. That means you're going to get a mortgage and a refinance for, you know, 5 5s, 6s, 7s, depending on your score. My logic is still not playing out yet with this, but we'll see. Again, I'm looking at this fib structure on the 10-year, and I just, you know, we basically all just sit here and pray that it doesn't happen. But so far, I mean, it's still this fib sequence is intact. So this is really one that I'd hope the Fibonacci sequence is wrong, because then you have a target of, you know, an 8%, which is going to put your refinance and your mortgages at 10 to 12, arguably. Yeah. You imagine the housing market after that. The world might be over, actually. So really hoping that long-term weekly, it even might be a monthly fib structure is completely inaccurate. Yeah, I mean, I would hope so. Time will tell. Speaking of the old Bitcoin, which I'm probably already a little bit late to this one, but there will be the breakout, so you'd imagine it's got to retrace the breakout, which it probably already did on the 1 and the 5 minute. And there's a 30 minute, and so on and so forth. Let's track down to a 4 hour. 4 hour doesn't have any support hits yet. Also the transition period day 30. No tags there. 4 is 5. Yeah, see, like now this is where I would, you know, I'd basically be looking for the short-term backtracks, which we kind of already had, obviously. You can see we've already backtracked this little breakout to the 30-minute, so on and so forth. But, and the reason I say that is because we kind of went up into that daily target, so now you're getting a little bit of a pullback, so you'd almost be looking for what you just saw. So take this whole thing. 1 second. We're going to take this, right? So what did you have? You kind of had... And then this would be your transition point, Alt-V, all right? And then you go to up. All right, so you would just almost assume that's probably the case you're going to go through. Again, this is all pretty short-term stuff. It doesn't even really matter. The only thing that matters for Bitcoin is us going up to 125,000 to 140,000 at this point, because if not, then I got to delete my Twitter page. So, pretty much, it's not about me making money on Bitcoin at this point. It's about saving my Twitter account. So for those of you that are watching the stream and control the price of Bitcoin, just at least let it go to, all I need is I only need the low side. So I only need 125,000 or so. I don't have to go to 140, but at least 125, and I won't have to delete Twitter. If you can make that happen, it'd be much appreciated. Appreciate you. You will own nothing, and you will be happy. You will sit at the dinner table with your daughter and eat crickets for dinner. Crickets. With a little bit of ant juice sprinkled on the top. And you will be happy. That's exactly it. Exactly it. The cows are creating too much global warming. Let me show you in my private jet real quick that these cows grazing the farm beneath me they're causing all the problem. It's comical. The kid streaming in his office. The computers, they're causing too much heat in the world. We must shut down the internet. Unless you are on my G5, and then we give you internet, because you're special. Bitcoin, it's gonna go to the moon. It's 150,000. It's gonna be huge. It's gonna be big. Oh, that's comical stuff. Yeah. So we're just basically hanging out here, watching the old market, so it's actually probably a decent time to look here. There's that guy. Extended trading hours. Yeah. We are going to I mean, yeah, I don't really have a whole lot to. I mean, we've really covered most of what I would probably could have covered. We've done that so far. Not a whole lot more to talk about. I mean, there's always a little bit, but until something, you know, you guys already have seen the 1 minute trend, you've seen the 5 minute trend. We're not resetting the 30 minute yet, so there's no 30 minute buy signal long sort of concept. Really, I'm just kind of watching the VIX. Maybe it bounces, does something at some point, you know, into tomorrow, today. You know, it doesn't really matter to me. But again, yeah, most of the cool stuff is always going to happen earlier in the day. Pretty much always the case. How long have we been doing this for? How long is this? What is it? I don't even know. Does it tell me? Oh yeah, hour and 39 minutes. Nice. It's too funny. They're posting up a bunch of stuff. Let's see, 48 minutes ago. Do. So the 1 minute macro bearish trend, huh? So I guess since, you know, there's not a whole lot to do, we'll just kind of go into the 1 minute and just kind of have some fun, I guess. That's about it. So we got that guy and maybe even the roll. So this is your current little 1 minute roll resistance, which already pretty much kind of started up there. So you're kind of not, it doesn't really matter. There's that guy. And then we should probably take a look at this last low, which probably already broke. So we're probably going to have to go back to the previous low just for funsies. Yep. So that guy's done for. So we're going to be on this guy right there. Again, just taking our last low and our last rally and figuring out the average share price VWAP of that up. And then obviously taking the top of this market and this leg down and figuring out where that kind of lower high 1 minute micro resistance would be. Same stuff we look at for Bitcoin on the daily, but it takes a lot longer for that stuff to develop. So the only thing I really be able to kind of walk you guys through in the immediate right now is going to be some of this micro stuff. Why do I never check out? You know, it's just, I don't know. I guess it's not that I guess I really never do check it out. It's not that it's not important. I guess I just been focusing on QQQ and SPY for so long that I just never really looked there. And then also I will say this, you know, they all pretty much do about the same thing. That's not true. To a degree. So here's the Dow, or is this right? Dow Inc. DJX, Dow Jones Industrial Average Index, CBOE. I maybe don't know the best ticker for it on here, or is it DJIA here? I can figure this out. Yeah, I'm sure one of you guys probably know. Yeah, it goes to show I don't look at it that much, right? If I can't figure out the ticker for it on TradingView. DJI. Ah, there you go. TBC, DJI, and that's weird. I don't want the CFD though. Yeah, I don't really want the CFD though. Could look at it this way, but it's not the true one, but it's good enough. So right now, and let me just double check that because I'm just it just seems a little sketch. I'm gonna double check on TOS too. Yeah, I guess we'll do it that way. Okay, so we're gonna use this guy, and actually, you know, I'm a favorite of this bad boy. Did that become a favorite? No. Or yeah, I do have it. I've had it the whole time. Maybe. I don't know. Yeah, so you're looking at the Dow here. This does not seem right. I guess it is. No, that's not it. That's the freaking dirt. No wonder why. Like, that doesn't make sense. Anyways, I'll do it later. I'll just add it right now. Okay, good stuff. Yeah, so looking at the Dow's in a sell signal. All right, so out of the 30 stocker magoos for the Dow, those have not gotten picked up enough to throw the market into a long signal yet on the Dow. So that would just tell us that the Dow Jones obviously a little weaker right now. So, you know, that could arguably use as a secondary kind of catalyst there for the market. So the day that this goes back to positive, you could probably use that to continue furthering along on the market, something like that. You know, in that, you know, you actually might, well, yeah. I don't know, I wonder. I'll have to pay attention a little bit more. But yeah, we'll see. But yeah, right now it's not in a long signal. So if that changes, obviously that would be a good thing for the market, but it's not the case right now. Check out the QQQ again. QQQ obviously in a long signal already. Duh. SPY. Long signal, yeah, duh. Oh, that's the SPX. There we go, SPY. Good. You think we see any danger pullback on Bitcoin? You know, real quick, what I'll do if you guys want, we'll play this over a couple times. How about we go through? We're gonna go through the replay feature on Bitcoin using the standard deviation system. It's not gonna be perfect, but you can at least kind of for yourself, you know, get a visualization of what we may expect, kind of what we could see, so on and so forth. And then you'll get an idea for where I'm coming up with a lot of this too. So we'll go over to Bitcoin real quick. I'm going to put this on, I'll put it on a fast-paced replay feature, and then we'll slow it down. And if you guys, you know, have some questions about it, feel free. And if not, you guys can literally do the same exact thing at home yourself. So we will delete everything real quick, remove drawings, and I will go to put on my standard deviation here. Alrighty, cool. I don't like that it does that though. I could turn that off. Let's take off the waves. Candle EMA plot. Would it be that? I don't need that. Moving average cloud. Don't want that. I don't want that. Okay, then that should be good. And then we go to a daily, weekly. Okay. Alrighty, so we're gonna go back quite a ways away. Now, in the earlier days of this, wait, where is it? Why isn't this working the way I was thinking? Oh, that's why I dare. In the earlier days, there was more. I would say that it's more volatile, things like that. So you're gonna see the standard deviation, you know, kind of get blown out a couple times, right? You need something to kind of develop a bit, but you'll understand. So I have to zoom in a lot here, or else you're not going to be able to see it. So it's taking a second. All right, so I'm going to start playing this, and this is us back in 2012, and we're going to go from 2012 to pretty much where we're at now, and you guys will get to see how the market in the past has traded on the long-term weekly scale in relation to, you know, normal distribution methods, and then that way you can kind of get an idea for what we may expect kind of through this cycle as we come into the standard deviation distribution method and areas. All right, so I'm going to put this to, I'll do a 5x, I'm going to do 10x, and then if we want to do it, you know, so that way we can get through it quick. This is going to move fast, so and then we can do this over and over, right? So you don't see the standard deviation yet because it hasn't plotted. It needs at least a year of data. So we're getting, you know, this is at least on TradingView, right? So 2012, it should populate here pretty soon. Come on. Come on, buddy. There it goes. All right, so there's... Oh, I should pause it. All right, so this was back when... I don't even know when. This was back when it was, I don't know, 17 bucks or so. So here was, and this isn't anything super significant, but again, back in the day, going from 5 to 20 was huge, right? So back in the day, that was I mean, it was lower than that, but back in the day, we went from, you know, this to this. So that was 221%, right? And then it crashed all the way down to here, which was a 55% decline. So the first ever time that I noticed, well, just saying, just in general, we get into +3, +4, you get a 50% correction. All right. Earlier in the days of Bitcoin, it was so volatile that it continues to break out the +3, +4 stuff, and so that's just kind of a process of standard deviation, volatility, repainting, and you know, so on and so forth. But anyways, we'll continue. So here's something else to take note is that this right here was the +3, +4 top. So if a +3, +4 top is used for selling and we know some people short there, then it also becomes a level where we know obviously like it's a key break spot, because if we created a top because it was overbought then, now it's kind of a breakout squeeze spot, which in this case it sounds dumb saying because obviously getting above the previous high would always be seen as a breakout. But at least now you kind of have reason as to why the top was initially put in, because it was a statistically overbought area. So the odds of it pulling back were kind of high there. So those that kind of know that may sell it short. Therefore, it's not just a top. It was a statistically, you know, favorable sell point, right? So it's not just a random top. So it kind of gives you some foresight into it being an important top to, you know, get through in the future. All right, so now we'll fast forward. All right, we're going to fast forward, and we're starting to come up into that. Ready? So right now you can see the price is coming into what was, look at, this used to be the +3, +4. Now the +3, +4 is all the way up here, okay? Because it's repainted and it's adjusted. So like I always say to you, the price targets will change. They will update, and I will update you along the way, because as things progress, market dynamics change. Now the +3, +4 is here. I thought this would go quick, but it's not going to go quick. All right. Now the +3, +4 is here. And I'm going to have to zoom out here in a second. Okay. Now it's, again, all the way up here. When you're moving at a 10x speed, this stuff moves super fast. All right. There you have it. There was a breach, oh, sorry, into the +3, +4 for the first time as it continued to paint up. All right, so look at, you see that? You had a nice correction in there. It was quick. On this candle, you may not see it, but we definitely had a correction there from here down. So there was a 25% correction after the price finally got into that zone. Even though it repainted higher and higher, finally got in there, 25% drawdown. Quick, and bought back up so far, but anyways. So now the +3, +4 is, well, we'll see in a second. All right. So anyone who thought that was the top just got blown out again to where? +4, +3. Okay. And then anyone who thought that was a top, again, repaints up. And this is what I was saying. When it was early phases of Bitcoin, there was so much volatility that the +3, +4 doesn't necessarily top the market, and that's because it's so soon, it's so early on in its existence, right, that there really isn't any overhead sellers at this point, right? So it's got to find its top, and these statistical areas can be the top, but it's no guarantee, and so on and so forth, right? So we'll continue on, and eventually you can see it blows out the standard deviation. All right, so hold on real quick. Let's go back just a hair, and I'm going to change this to like a 7x speed, and I'm going to take us back a little bit. Select bar here. All right, so we're going to go back to here, and I'm going to pay this at a 7x speed, a little slower. I'm trying to get it. Well, anyways, that's good. Right, so you'll eventually see it blows up, blows up, blows up. We even get outside the standard deviation, right? And then the market gets absolutely cooked. What do we drop here? That was a 72% correction, which, again, the market blew up thousands and thousands, whatever percent. So, yes, makes sense. Okay. All right, so now we're going to continue on. I'm going to increase this to 10x speed. All right. So there goes our top, et cetera, et cetera, et cetera, right? So you can see how the standard deviation is now kind of increasing to accommodate that big move, right? So now our extremely overbought target euphoric market would be here, okay? And then it would be, you know, up to here. Sorry. Oh, shit, did it again. So there you go. There's your next move. Sorry. See how fast that moves? So let me go back real quick, and I'll stay zoomed out. That way we can see it. Select bar. We'll go back to like right here. So again, like I said, earlier phases, Bitcoin had insane volatility. I'm just going to delete this, and we'll even drop the speed down to 5x for this so I don't miss it. So again, you can see we press up, eventually getting into +2, +3, +4, rejection, rejection, breakout, you know. Oh, there we go. +3, +4 top, pull back, boom. All right. So you can kind of see how this top towards that +3, +4 was respected a little more than the previous cycle, right? It's starting to develop more of a longer term, you know, statistical cycle at this point. So there's that top. Anyway, so this will be where short sellers piled in, all right? All right, so we're going to move. I mean, now you would see that the standard deviation price is going to be all the way up here now, okay? Hope this is helping. Hope you guys aren't tuning out. You know, hope you guys are sticking around, having fun, all that good stuff. All right, so you see how the market's staying down a bit, so the standard deviation's coming down a bit. That's all going to change once the price blows up again. So you're seeing it staying down, so now the trend's kind of flattening out because it's less of an uptrend, more of a sideways down. All right, so now the market's actually downtrending, losing structure, which doesn't, that doesn't mean like it's late to the top, late to the move down, all that good stuff, right? So you'd be to like here. All right, so I'm going to speed this up again because I don't want to have this take all day long. So we're going back to 10x speed. All right. Really what matters the most of this is that once we get into the euphoric run, you see how it kind of reacts to those trends. Yeah, I can use the scroll, but then it just kind of goes to the side and you kind of have to... You scroll well to zoom out. So again, there is that +3, +4 top in there. A little rejection. Right now we're in the mid-cycle run. So once the mid-cycle run gets taken out, then we'll go on the next move for Bitcoin. There's the mid-cycle run getting taken out. Pretty sure. Let me think. Yeah. Or no, sorry. That is... Well, no, it's still the mid-cycle run, but never mind. Sorry, it's this mid-cycle top once that gets taken out. My apologies. This is the bear market midway. Then that's, yeah, mid-cycle run. So now we're going to be looking at like this jolt up. Actually, this is important. That last pullback you just saw, but anyways. So there's that market kind of boosting up again. You see how many pullbacks? So this was this the last one? Anyways, 2017 cycle, right? We have broken out once this high right here. Let's just call it this. Once this high broke out here, we're on the euphoric run. All right. So once this high is broken out, we're on the euphoric run. Look at that pullback there. Look at that pullback, right? So there's been a lot of pullbacks. And these two pullbacks started at the +2 weekly, right? Which is where we just hit a couple weeks back. And what happened to the market on Bitcoin started to little pullbacks, right? Nothing quite that big. But if we take this back on Bitcoin to right here, right before the breakout, okay, you're focusing on the green line, which is the +2 weekly. Watch it. All right. So as soon as you get to +2, you generally find some resistance. Right there, +2. Boom. See it wick right there. Instant off the green. Wick down. That just happened like 2 weeks ago on Bitcoin. We hit +2, pulled back. Not quite as severe as this, but we did. So that's why last week or 2 weeks, I'm like, yeah, it's totally normal. We have some pullbacks in this area because I've already seen all this stuff before. It's like, yeah, we're at the +2, common area to find some resistance. Does it have to? No. Does it? Probably. Okay, cool, right? So we get a resistance, +2. And guess what? We're still in the bull market. And guess what? We go up to about +2, relatively close pullback. All right, there's +2. There's about +3. And now what happens? All right, so right there, sorry. This top was a +2 or a +3, close to +4. We could go back just a second. Just want to double check it. So we should have a... Right there. Yeah, so at the time, that was about a +3, +4 top. All right, so now we know shorts pile in here. If we take that out, we blow them up. There you go. They get blown out again. So that's the first initial statistical overbought euphoric attempt of topping the Bitcoin market off the +3, +4 standard deviation. All right, and so then we blow them up. And this is increasing dramatically now. Okay. Okay, zoom out more. All right, so you just hit +3, +4 again. What's that price point? About 15,000 to about 17,000, okay? And then you kind of squeeze them out again, etc. A little bit, all right? And then what happens? Market looks to top, all right? So the market pretty much tops here, Bitcoin +3, +4, all right? Then we come down. And then we're going to restart this whole entire process. So we'll speed the, oh, we're on 10x. All right. So what's going to happen is we're going to come down, we're going to hit a bottom. Then what we're going to do is we're going to go up like this, doink, doink, or if I would ever work, we're going to go up, and then we're going to top, and then we're going to pull back, and then it's going to go. So we're initially going to go through the mid-cycle run, and then we're going to go through a mid-cycle top. Once the mid-cycle top is breached, we will then break out. So this is the mid-cycle run. That's the mid-cycle top. Once the mid-cycle top is breached, you will be onto your bull run. So again, your mid-cycle top is here. And you're going to pretty much watch this process repeat again. This time the price is going to blow up to about 60,000 in this market bullish cycle. Here's your breakout. All right, now what are we going to do? Probably just blow this price up. Okay, wait a second. Well, it's just going super fast. But anyways, you get the point. All right, so there, right there, that was a +3, +4 standard deviation top. Okay, let's go back, just review it a second, go like to here. We'll change this down to a 5x speed, hit play. All right, so ready? When we get into the green box, it should line up with the +3, +4. Yeah, +3, didn't quite get +4, but got basically +3, all right? So then you think it's the top. They come in, short it, get blown out again. And then we top. All right. So then, yeah, we'll just continue on. We'll fast forward this to 10x, and then we will be into current day's time. So now we're going to fast forward it. We're going to go through a bear market. The bear market's going to bottom. We're going to go through the mid-cycle run, and then after the mid-cycle run tops, we have to break out the mid-cycle top, and then the next phase of the bull market's going to start. I assume that they're not going to allow these cycles to repeat this well, because if they do, then it just becomes too obvious. So if this just continued to work every halving cycle, then it's just too obvious. So you know, but maybe not. You know, it's not like we have 7,000 people watching the stream all learning this at the same time. So you know, you never know. If there's less people that, you know how the cycles have been operating and work, then it's more likely they continue to operate and work the same. The more mainstream it becomes, the less likely it would work. So here comes our bottom. This is about to be the market bottom. Now we're going to go to the mid-cycle run. And then once the mid-cycle run tops, we must break the mid-cycle top. And then the last leg of our bull market on Bitcoin is going to start, which means we're currently on the last leg of the bull market for Bitcoin. Okay. So do remember that this was the bottom on Bitcoin, right there. So we've been on this bull market for a couple years. For those that follow me on Twitter, you guys will know that we pretty much told everyone to be buying Bitcoin all through this. Stay long, buy it, price targets all the way up. So that was fun. So this is going to be a similar scenario. We actually take the mid-cycle top all the way to about a +3, +4, I think. Yeah, close. Maybe not quite. Never mind. Got close. So there's your mid-cycle run. This is your mid-cycle top. So again, we already know once we get through this high, for the most part, there's more to it than that I follow. But once you get through that top, you're going to go on your bull market run. And then what are we going to do? We're going to look to take the market all the way up to a +3, +4. Once we get to +3, +4, I'm assuming there's going to be a seller pullback because the market's super euphoric, super extended at that point. So we've gone to +2. Look at, wait, hold on, go back. Wait, hold on. I got to change this down to like a 3x speed. So, replay. Wait, select bar right here. So we're going to go back. All right. We're going to zoom in. So you remember when you were asking, like, what do I think is going to happen with Bitcoin? It's like, yeah, I think we're going to see maybe a couple pullbacks. We're kind of in that pullback area. We've already been doing it, right? So if you look, what happened? We broke out and we go just to about the weekly green right there. You see that? See how the price of the weekly deviation right now is 95,000? It's going to update to about 100,000. Hence the top, the pullbacks we were seeing around 100,000. For me, it was less about the psychology of the 100,000 mark. It was more about the statistical level of the 100,000 mark. So if we continue this, I'll even go 1x now. So we'll see this boost up to about that 100K mark, obviously, and we start getting some resistance, and you'll see why. Right? We tag right there. Stop it. Pause. See that? Right there. There's your live tag of 99,266. True live tag of statistical probability level. One of them, right? Boost it up maybe a little bit more. Boom. There's your red pullback. That's the same jam that we saw back here. It's the same thing we saw back, I think, here. Yeah, these ones. So I think that was these. So this pullback, that pullback. That was off the +2. Then this is the first +3. Then that was them just like breaking through the +3 and going crazy with it way back when, okay? Now, if we go back to the last cycle, it would be this is right here. That is your +2. That would be the $100,000 rejection that we just did. If you were comparing the scenarios and trying to overlap them to make them the same scenario in real time, then this right here would be where we're currently at now. And this move here is going to be your +3, +4 mark now. So this is what we're looking for to happen, arguably, here. And or a little higher as it goes up. This can increase, as you just saw. So what we saw back here, again, that pullback scenario is what we're looking for here. And right now, we're here, which is right there. So it is the hopes that, we'll hit play again here. See that pullback? Actually, I wonder what that pullback was. I think it was about like 10% or something like that. Maybe 15. I don't really remember, but let's see. 10%. Maybe it might have gone a little more. Did it? No. Okay. Well, then we all boosted up to 105 or whatever, 103, then fell again. So this current pullback that we're basically seeing, I contributed to just being up towards +2 statistical probabilities, 2 standard deviations away from the long-term weekly mean on Bitcoin, and we can arguably see a euphoric run into right now 124,000, 140,000. By next week, it'll be higher, and the next week after, it'll be higher. For every week that Bitcoin stays up and does not hit that target, it gets higher and higher and higher. Could be 180,000. Again, it's I don't know, but I just follow the trend as it develops. And so we could be looking at 123 to 140. You could be looking at 150 to 180, And then we top. And then we crash all the way down to about 50,000. Everyone's pissed. So, it's a very cool moment we're in right now for Bitcoin. So, so it was also, maybe my expectation that we could see a scenario. So there's really two ways I'm thinking about Bitcoin at this point. It's basically we'll just say the price never updates, so we can just keep it simple, but we'll say Bitcoin runs up to here, right? And that's the top, right? And the cycle ends and we do our bear market bullshit, right? Or we go up, we hit here, people take some profit, maybe some people short, and then we do everything we did in the past and we blow out that early top pick attempt, and then we're done. So that's pretty much my scenario there for Bitcoin. Pretty much it. It's either that or that. But this could also be much higher too. So, I think that's why they won't give me 6,000 people on our YouTube stream. Probably. But that's okay. We got you guys, and you're all that matter in my heart. So, yeah, so that's pretty much what we're doing with Bitcoin. That's pretty much been my analysis since, I don't want to say since the market bottom, because it's taken time for things to develop the way they did, and never is anything the same as the past. It's always going to be different, but they do tend to rhyme. So that is partially why I believe also the Bitcoin cycles will not continue to repeat the way they have in the past, because if, let's just say, Bitcoin succeeded for even 40 more years or 20 more years or whatever, right? The cycles would just be too obvious, right? I'm still doing very well in this last cycle with Bitcoin. Probably the best trade I've done in years at this rate. So really happy about that. But if it were to repeat like this again, then it would just be too easy. So that's why I kind of like, I don't know if we're gonna or at least things will repeat, but they're gonna be at least significantly more confusing than what it's been. Maybe I'm wrong. I don't know. I hope I'm wrong, because if I'm wrong, then, just crush it every time, So I don't think that's going to be the case. So we'll see. CPI today will finally allow me to sleep in peace. How would standard dev system work with SPY? So the standard deviation system does work with the SPY, but it's funny because we normally don't see standard deviation on the SPY go to +3, +4. We actually only see it go to -+3, +4. So meaning that normally the market as a whole, the SPY, right? The global finance economy, right? We normally don't see situations where the SPY or the QQQ are able to get so euphoric that the market blows up to those sorts of extremes. But we have seen the market get fearful and panicky enough to see the opposite. -3, -4, maybe not -4, but I feel like I have. I've definitely seen some -4s. Definitely -3s on the market. So we've seen panic create -3 environments on the overall market. Never enough euphoria to create a +3, +4 sigma on the upside. So, and I would contribute that to it's the SPY, right? So it's 500 underlying equities in their performance versus it's just Bitcoin, right? Or you may see stocks at times. Individual stocks go to +3, +4. Individual players get extremely euphoric. But for the overall market to see that amount of euphoria, it's hard for it to do, and I would say because the markets are more rational than that, especially diversified across 500 equities. But it's possible to get enough attention on one underlying equity. We'll call it Beyond Meat or Carvana. That was a good one that went crazy over the past couple of years. It's possible and or easier to garner enough attention for a single equity or a single stock and get enough buzz on that and enough attention to that it itself may get that euphoric. But for you to apply that across enough stocks so that the underlying SPY market sees it, little hard to do. Vice versa, we've seen enough panic, though. We have seen enough panic on the market to see -3 and all that, and that's arguably because panic is stronger than greed, so some would think. If you look at the market over the past year, that saying definitely holds no substance, because clearly the greed can just run a market for forever, right? But as the saying goes, bulls take the stairs up and bears take the window, right? So you do more of a stair step up and you can do more of shelf dives down, right? So if you're shelf diving fast it'll be easier to run the market down to a -3, -4 versus stair step grind it up to a +3, +4. So that's kind of the difference there. And then to add on top of that, generally speaking, we don't see the SPY market too frequently outside the -1, +1. So I would say 90% of the time, your SPY market is going to stay in between these two channels, always. So that's why when we go into a bear market and things get crazy and we see the market down to here, that's when we're like load the dip, right? Because that is so outside the statistical norm of trend that it's on sale. So this is, and actually I could probably show you. Oh no shit, I could show you it. Yeah, so I could show you the last time we did this. Now I'm thinking about it. So the last time we hit -3, -4, it was right here. So, and this is where we said basically you should be long the market, back go long. Those in our private room and stuff, even those on Twitter from a long time ago remember this. That was actually so we'll go into it. That'll be fun. So we'll jump into the backtrack of the last bear market cycle, and I'll show you the bottom. Was at the -3, -4, because it's a very oversold, statistically probable bounce by spot that if you don't have any degree of standard deviation knowledge, you just would never know exists in the first place. And not that it's a perfect system, but if you don't know anything about standard deviation, there's no way you'd be able to conclude that in that last bear market bottom, it was a -3, -4 statistically oversold buying location. You wouldn't be able to interpret that bottom in such a way, which is okay. I mean, it's, people pick bottoms and tops all sorts of different ways. So yeah, we'll get into it. So we're gonna we'll go to like here, and then we'll just play it up. So it might, my memory, it might be the daily, it might be the weekly that we hit the +3, +4. We for sure hit standard error -3, -4, but I'm almost positive it was the daily. So we'll get into it. Ready? We'll just 10x this bad boy, like Grant Cardone. And, yeah, right there. All right, sorry. Yeah, well, not totally, but one of. So you can see we kind of sold through it for a while, right, on the daily, but maybe it was the weekly that I'm thinking about. Hold on. Yeah, I think it was the weekly. And I will say the standard deviation works a little different on TradingView than it does on TOS. Yeah, see, TOS is a little different, but we'll try it here. 1 second. Or TradingView is a little different, so it's not. We'll see. So maybe it was the weekly instead. All right, so let's go again. So we should see a -3 to -4 kind of dip and then bottom, right? So hold on real quick. So this right here, that was a dip into -3. So that move there, 409.95, was an initial dip into -3 territory. And you'll see we bounce out of it a little bit, but continue on. There again, like that right there was a -3 live hit. There's a -3 breaching into -4 territory hit. Another bounce. Yeah, see, this is, I would say this calculates slightly different than the TOS version, so it does look a little bit different. So it's not going to be the same, but that's kind of unfortunate. But bottom line is you can kind of see at the time, a lot of these bottom pick areas were around that -3, -4. Eventually you can see it. And I will say this, if we go to standard error, I wonder what that looks like just out of curiosity. So settings, inputs. Doesn't have the standard error feature here. Well, guess I can't show you that. So, not the most perfect example. Again, looking at TOS is a little bit different back in the past. Again, it has to do with PineScript and the way they calculate the look-back period on PineScript versus TOS's look-back period, but you get the point. Uh, 2 o'clock. Yeah, we've been on for 2 hours and 20 minutes. That's a decent amount of time. It's probably pretty good. Can't say I'll be on this long every single day. Probably won't be, honestly. Let's get out of this look back stuff. Yes, no, maybe so. Remove all 36. So, yeah. You know, I just want someone to just comment with a thumbs up when Bitcoin hits 100-something thousand. Well, you know, the target's on the upside. Just give us a thumbs up. What's going on with Spy Daddy? We'll do a little quick run through here, and then I'm probably gonna hop off here. Been a long enough day. Okay, so we are here, which basically means the market is still bullish. 5 minute. Yep. So real quick, I'll bring this guy down to like right there. Bing, bang, boom. So right now we're actually just really testing kind of like the breakout level of this previous run up. It's all kind of more scalp stuff than anything, but yeah, clearly there's a little bit of a negative roll here. So this last pop that you just saw, like for example, we're just gonna go to right here, and that's probably gonna have the predict the top of this little 1 minute micro roll. There it goes, bing, bang, boom. So again, if you were watching this leg come down and it's bearish, 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 you're like, I want to sell it short, you usually want to wait for a pop. Not chase the low, wait for the pop, back to the VWAP, and you can have fun down. All right, same thing with the previous pop, right? Which would be, which would have been this, right? So let's see, this leg down. So say you're like, oh, this is going down, I want to short it. You don't short the low, you wait for it to come back, probably test VWAP down. You know what I'm saying? So same thing here. See like this whole leg coming down, right? Everyone that's selling this, right? We already know at some point it's probably going to come back to these VWAPs on the highs. So whether it be sooner or later, that's already our back test target on the micro. So like as soon as the sell leg starts, you already have your back test targets for the micro. They don't always play out perfectly, but you have a pretty good idea. So this just tells me, again, everyone's shorting this move down right now. Their average share prices, and really their average share price is lower, but I use more of extreme measures when I talk like that. So this really isn't their average share price. Really their average share price is here. So really their average share price is like 607, and it's really down like here. Wait. Is that the right one? I think so, yeah. Yeah, so really their average share price is right here. So if we took the market up to here, most people like would be underwater on their short because again, most people didn't short the top. They would have shorted somewhere in this candle. So effectively, we could call this truly this last micro 1 minute the average share price for shorts, and arguably their like mini micro max pain would be like somewhere up here, max pain. And so yeah, so if I adjust these the way I like to have them, it would be back here. That's kind of weird. I don't like that. Settings, visibility, so now the max pain is like right here on the micro. Okay, and then their average share price is like right here. also too, you know, I was like gonna say, if you look at the 1 minute here, not that it's anything too crazy, if we take the last breakout, so if you take the last structure breakout, so everyone's like, oh, is it gonna go higher, and then poof, it breaks out. This is the breakout volume weighted average price. And what happened, you just took out the breakout volume weighted average price, hence roll bit. Right? So when you think of like support horizontally, I'm looking at like a VWAP a lot of times, something like that. So again, this is the last breakout. So all the volume accumulated from this point and trading it up theoretically just got stopped out, at least on the 1 minute there. Now, maybe not everyone did, but if you know, it's just the way I explain it. So, yep. So yeah, let's see. Average share price right about there. And then again, through their average share price, you'll squeeze them out, and then you'll run them more to a max pain level, which would be, I'm sorry, it's kind of a lot of lines in there. My apologies. Take this off here. So I just want to kind of watch this play out for a second, just so you guys can see it. Oh, did you really, Cooks? Appreciate that. Yeah, I messaged you about it. I'm like, and then in the back of my head, I'm like, he hasn't gotten back. I'm like, I bet if he can do it, he's probably doing it, you know, based off the stuff I saw that you could make. So I do appreciate that, because, you know, I've been wanting to use that. You know, I'm trying to look at some of these equities, and, you know, but there's just too many to look at, too many scenarios. I'm like, I actually do need a scanner for this one, and so on and so forth. So I'm not gonna keep moving these boxes because it's kind of pointless, but you guys know. So we will just take those off, so I can just right there. So like average share price. Again, if you can get through that, then you'll start kind of like forcing the micro shorts out. You'll probably again run them up towards that little micro max pain. Thanks for everything, boss. Yeah, no problem, Pegasus. I mean, again, I'm 31, have got no kids. My wife is a psychologist, so she's at the office all day. My little puppy is at his doggy daycare for the day. I have a rental property showing at 4 o'clock-ish, maybe a little past, so really, you know, and this is I guess you could say my what I do with my life, just, you know, so no big deal, no big deal. I'm actually kind of enjoyed this because, you know, today I set up some new stuff on the stream so that I can just kind of flip through. I finally started using my Stream Deck again, which has been kind of fun, so I can just flip through, you know, all of these screens real quick for you guys at the click of a button now. So kind of having fun setting up some old software stuff that I used to play around on. So, you know, some of the creative minds coming back there, so that's kind of nice. I could flip you to, you know, a be back soon, or I could flip you to a screen this starting soon, all that good jam real quick, and then just right back to the chart if I want to. So now the functionality of streaming is a little bit more fun and not as, you know, daunting with, you know, moving all the screens and being annoying. So I like to trade against still a SPY, some UPRO. I have done some Bitcoin futures here and there. So it's mainly like some UPRO. I've been involving myself back into some single equities a little bit more recently, as I'm kind of liking, you know, trying to kind of find some edge with the 50 SMA strategy on some single equities. But I'm still not as active as day trading as I used to be. I've really slowed everything down, but starting to kind of dip my toes back into more activity. But again, a lot of what I'll do is still just based off SPY, some UPRO, some futures on ES or MES here and there. Like I said, biggest thing that I've been doing is buying Bitcoin like this whole past year. That's predominantly where a lot of my money went to, was Bitcoin this past year. Just because I just researched it enough, just had more conviction in that than anything. So that's a lot of where my better performances come from this year. But also, like, who hasn't? You know, if you've owned Bitcoin, of course you've done pretty well. But anyways, so yeah, you can see average share price taken out, micro trend back to max pain. You know, it's even gone higher. Not that it wasn't so. You know, I mean, it's pretty common there. You can see how that all kind of came to right there. So again, that's people kind of chasing down that short. Eventually, things change, and so and it would have been just like back here. So if we do the same thing back here, ready? Watch. We're right here, and we're gonna take this guy. Why isn't it? There we go. Wait a second. Wasn't it supposed to be there? Oh, wait. I see. Yeah, we'll do this. Well, that's really how it should be. And then I will delete it, remove. So let's go back to here. And then this guy, yeah, it's good enough. Anyways, this last example wouldn't really work that great, but you get the point, how that all kind of works. Let's check a 5 minute too. So it looks like the 5 minute may not have a reset, so that's also kind of on deck. Doesn't always have to happen right away, but we don't have a 5 minute high in the snap roll, so I guess we kind of do to there. This one's kind of just an odd setup because you have red, green, so you kind of create these little mini 5 minute shelves in between, so it's not really the greatest concept for a 5 minute retrace view app play there. Why UPR over SPXL? It's not that, I mean, they're both the same thing. UPRO is just a little bit cheaper. That's really just it. I think they're both 3x, if I'm correct. I'll just double check. Let me double check that before I say something incorrect. Let's see. Yeah. Yeah. So both 3x leverage. That's, yeah. I'm just not as familiar with SPXL, but so it's really just all, they're just two different tickers. One's more expensive than the other. Maybe share count on the other one's higher or lesser, you know, vice versa. But that's pretty much it. As far as the price action, they're going to be the exact same, right? If you go look at SPXL, where is it at? I guess I'll do a 5. Yeah, whatever. I'll do a 5 minute. That's better, I guess. So here's SPXL, right? 5 minute. Now we just pull up UPRO. It's the exact same. Come on, Bitcoin. We have a Twitter account to save here. Let's go. Why UPRO over SPXL? Oh, I already read that. Yeah, no problem. Yeah, Cooks, can't wait to check out that new scanner you built and set up to me. I appreciate that, buddy. I really do. So yeah, I guess we'll probably end it for the day, even though as soon as I hop off, something cool will probably happen. I feel like that's how it normally goes. Yeah, I mean, like I said, hopefully we get our Bitcoin targets into like the 150Ks at this point. The SPY, let's just do a little wrap up and then we'll head out. And I got to double check the VIX too. So the VIX still just kind of flirting with its 50 SMA trend. We'll pay attention to that. If the VIX starts to rally off a bounce, we might get a little bit of a short-term pullback on the market. Totally normal. But as far as the market goes, again, let me just highlight. I don't need to. I already know where it's at. Yeah, so as far as the market goes, we're still on the long side of pretty much everything. Even though you can kind of see the market's pulling back a little bit right now, that's totally fine, totally normal. But the long bias momentum for the buy signal started back here where this yellow line's at. So, basically the story always is, as long as on the day that the buy signal starts, which was here, as long as you're over that, you usually don't have a reset, meaning it falls apart, right? It usually is a dip to long. So we have maintained the buy signal, micro VWAPs today. Market's in a long bias move. We will not flip negative the market. We will not flip bearish the SPY for anything more than pullbacks to dip buys unless the market transitions below the 50 SMA. So even if it went like this, it's still a dip long. It has to be below, which the confirmation below can be challenging at times, but to keep it simple, market will not flip negative, nor will the title of our videos until we're below it. So again, past 2 days, we were downsided below the 50 SMA. So title of the video and everything is downside, which is pop to short until you're over the 50 SMA, which is right here. And then it's dip to long. It will be the same scenario. So until we're back below 50 SMA, markets are on the upside. Doesn't mean the markets can't pull back and have harsh pullbacks. It just means the trend is not negative for the time being. You guys have a good one. We'll catch you back tomorrow. Yeah, really anytime around like 11:15, 11:20, somewhere in that area. I might just kind of set it to 11:30 at this point. More of a consistent start time. So it might just be like 11:30 we start tomorrow at that rate. So anyways, have a good one. Cheers. Take care and catch you tomorrow.